Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today, Friday, May 13th. It is Friday the 13th. I should have had some spooky music or I don't even know, black cats. I don't know. Uh, well, so far, Friday the 13th is working out okay for the markets. Uh, My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. The few things that we're going to look at today, we spoke about this earlier in the week. We said when you see bonds turn, because bonds have been bid the last couple of days, people have been buying bonds. That's where the money's been going. As soon as they start selling bonds, that's when the stock market will turn. Today, this morning, the stock market is finally turning. At least it's looking to open in the green. We'll see if we can get a feel-good Friday after an absolutely brutal beating the market has taken this week. So bonds down, stocks up. We did get Powell pretty much emphatically saying that we are going to get 50 basis point hikes in both June and July. So that's what we're expecting. With that, we are seeing gold get hammered. And listen, we know the rates are going higher, so we're going to go from the 1%. We'll be at 2% by July. And I know that they're aiming for 3.5%. They're going to have to overshoot just to combat inflation. So we'll see how quickly that actually ends up happening. The other thing that we've got going on in the markets is Putin did say that that the any talks are currently blocked, and that is pushing energies higher. So we're seeing oil and nat gas both push higher. So we do have a bit to talk about in the FX space. Not a lot, of course. Everything about Luna and the whole Terra and the Tether fiasco. That's a whole nother story. But we're seeing Bitcoin and the other cryptocurrencies up. Of course, Luna is essentially gone. One of the top 10 cryptocurrencies evaporated in the last couple of days. So it just shows you how volatile that market can be. Before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian and I say as a buy or sell recommendation. We are doing this for your education purposes. You can see gold punching lower, getting back all the way back down towards 1,800. Yes, rising interest rate environment, not good for gold. But at least we might get a little bit of a reprieve today in the equities. It would be nice to see a nice solid up there. I can tell you my portfolio could use it. Brian, I'm going to flip it over to you because there are a lot of headlines to kind of go through, and then we could jump into those equities and energy charts.
Yeah. So it's not a lot of I wouldn't say that it's the blockbuster. You don't see a lot of red highlights, but it's a lot of kind of smaller. I would say middle important type releases. As far as economic news releases today, we do know that we have consumer sentiment, which has been extremely important. Watching that drop below 65. I mean, it went up last time a little bit. We'll see what it does today. That could really sour the market. And then Mester speaking at 12 today is also one of those kind of midday talks. And it's a monetary policy. During the pandemic, it's it's an event hosted by the European Central Bank. So kind of outside of the Mester's wheelhouse, but can still provide something. As you mentioned, I think Powell, this is the first kind of story that we need to make sure we cover. And again, guys, if my voice is a little bit rough, I apologize. It's definitely Friday the 13th. Kip has been up since 1 o'clock in the morning. So yeah, I keep telling him I love my son. I love my son. Yeah, so coffee's not working yet. So it is definitely Friday the 13th at 8:30 in the morning. But Powell basically is reiterating that, hey, listen, we're going to do 0.5, 2 in a row. And which is interesting because this comes on the back of Bostic talking about how, sometime in the next week and a half, we're going to get up to 2, 3, and that's where we're going to see it all work out. Everybody said that they had to go early. We're already at 1. That means next time 1.5. And again, I think that it's fine that we keep, we're doing this. I think it's going to be, I don't know. It's interesting hearing them talk because they keep talking about the soft landing, and if the economy can continue to form as expected, we're going to do it, and everything's going to be great. mortgage interest rates yesterday were basically
Over
new,
5?
like, yeah, I think 5.2, and they actually said they're projecting them by July to already be over 6, which is
Yeah.
interesting because 2 years ago, we talk about things doubling, you were getting 2.8s, and, when you're all of a sudden mortgage rates double, and we're not even done. We just literally just started the interest rate rising, so it's kinda like, "Huh." I mean, people are gonna look at this, and if you remember, think back to, like, the housing bubble, right? I mean, that was kind of a real big deal when rates started to change. That's when everything went tumbling rather quickly. 6%, 7%, 8%, historically, is that high? No, but with
So
our kind of
the
recency
question
factor right
is,
now, it's high.
it's for all those people who got locked in or didn't lock in low rates and took variable rate mortgages and figured there'd be free money forever. And if the real question will be is, one, how overextended are they going to get? And then did the banks give out money to people who really oughtn't have borrowed as much as they did on houses that were improperly valued? So
Yeah,
hopefully
I
the
don't think
banks
so
are better at
anymore.
this. Yeah,
Yeah,
if the banks
I
are
don't
better at that, I hope so at least.
Yeah, I don't think it'd be kind of a mortgage default situation that we need to worry about. It's just a perception. I mean, remember before you're getting all these offers in the mail. It's like, oh, you should refi, take money out, do this, do that.
Yeah,
All that kind of disappears, and the kind of thinking is, well,
yeah,
wait a second, do I want to buy a house or do I just want to rent? Like, how much do I have to pay for the interest rate? So there are factors
yeah.
that are playing into it. That again, it's not the mortgage defaults that we saw, but again, this is kind of a big deal. And the dollar is, if I can find my dollar chart right here, you can see the
Yeah,
dollar, because of it is
punching
continuing just to go higher. I mean,
higher.
you're like,
Yep.
yeah, about to like, we got over here and we pulled back, and then bam, we went right back up again. Yesterday at noon, it was high, and we're punching right back in there again. And remember, this is in anticipation for the rate hike because they said they're going to do it. It hasn't even happened yet. Once it does happen and it goes higher, then there's even more reason to throw large money. Countries will start putting things in dollars because they can, they're getting money from the U.S. government. Um,
Right.
so there
And
there's
that
even
is
more reason for this to
pretty
go higher. So,
safe, right? Yeah, I mean that's as safe as you can get, for
right
real.
now,
So
yeah,
yeah,
yeah, right now it's as real and as safe as you can possibly get. Um, there was also news out of ECB, and again, we're hearing a lot of comments out of ECB. Although the euro and the pound really can't. And again, pound's not there, but it's basically considered the same. You know, I love some of the statements over here are just as good as ours. And again, they find the best pictures for these guys. A large portion of current inflation is the result of the pandemic and the war. Really? Okay.
well,
Sure. Um, Second round effects will be crucial. It hasn't happened yet. We'll definitely stop bond purchases in July. A rate hike in July depends on projections. I'll not give my opinion. I still don't see a recession in the Eurozone. I think
and none of
that's
this
kind
comes
of
from the pandemic and the supply
yes,
issues.
yes.
Did he forget
But
about that? There's a global pandemic
yeah, like you said,
that's
it's funny,
coming
but
back. I,
yeah. What I find interesting about this though, and again, this is kind of not tradable news for this morning, but this is definitely something that's tradable. Is I still don't see a recession in the eurozone. We already heard that if Germany cuts off Russian gas, and they said we are cutting it off, we're going to do it. We're going to do it,
it
right?
will cause a recession.
It will cause a 5% reduction in GDP and a recession in Germany. They already know it. So the fact that he's like, no, the eurozone is good. It's like your powerhouse is Germany. If Germany
These aren't
left
the
the whole
drones you're looking for. This isn't the
exactly. Yeah, so that's kind of a big deal, and you can see it. I mean, the euro pound is more or less flat, but you're seeing the euro dollar down 42 at this point with no retracing at all. Basically, people are not like, oh yeah, no recession. Okay, they're not seeing it. So this
it's
is
coming.
different to us. When they said we're going to cut bond purchases, the dollar took off, and again, the dollar yen is up 106 right now. The same statements were made by him in the ECB, and they're like, nope, we're going recession. So it just shows you the resilience of different countries. So, and again, with that dollar keeping up higher, and here I'll show you the dollar yen as well. Dollar yen is again, remember it was just dropping, and then yesterday at I'll put it on there. Just I'm not going to say it, but you guys know right there. You know what that means. Um, that was the reversal point, and it
Yeah.
came back up again. And then this morning, it did its little kind of basically it did a pullback. And again, this is one of those ones that if you run like kind of minor term fibs and you've been watching it, you can see that it came back pretty close to a 50% retracement right at a European session open. and that just led us higher again. So right now, I would say, overall in the big top, high to low, we are getting close. We've kind of flirted with it. We're kind of in this area of interest right now with it, and it's kind of using it as a place to grab more buyers. Really, we know the 50% is in there, but there's a little bit of candle there. There's not really a whole lot of action until we get all the way really up here. I mean, this is the start of the last drop, which brings us all the way back up to 129.80, which is another 90 pips forward. So could we get up there today? Yeah, I think so.
Well,
it's
and 130 was the danger zone before. Now it seems to be the
right.
baseline.
Now it's Speaking of danger zone, Top Gun Maverick, I heard it's better than the original. Just so everybody out there can debate it.
Nice.
Better than the original is what the quotes are saying. Just talking danger zone.
That's a bold statement. Hey, by the way, for anyone who's not familiar with what that little circle was, the clock on that one was 10:30. So if you join us regularly, you'll understand that.
Yeah.
And if you
okay. I just was gonna say, unfortunately, everything was a reversal from yesterday. Todd and I joked that, tomorrow we're going to have this conversation, and it's going to be, you know what? Everything that reversed yesterday, it's reversed again.
Reversing again.
Yeah, this is like that. This is like a seesaw week or something. Monday it did one something. Tuesday is different. Wednesday was different. Thursday was different. And then Friday, we're reversing from yesterday. Oil, though, was one of the things that is not really reversing as much because it did creep up yesterday. It is up at levels right now. I mean, it is at the 78.6, so it's a level for me. Like once we hit the 78.6, my students actually in Discord were talking about, they're like, what are you doing with 78? I'm like, I don't. When I do 78, I erase it. For me, it's too much of a retracement. It's a new trend, and everything else is in there. But we had talked about this level, and it kind of used it, right? I'll delete it now, and we're gonna have to redraw it on the other side. Adjust it. Let's bring it all the way down. Bring it all the way back up again, and you can see now that if there's a reversal that comes in anywhere in here, now we have some interesting levels that we can kind of look for targets to the downside. So right now we are at a level. Again, we're back up to 109. Remember on Wednesday we had an absolutely massive surplus, and it's continuing to rise. Okay, this is kind of going back to we can say whatever we want, but globally the demand is there. OPEC Plus and the IEA is like, no, the demand is lower because of China. We're not raising anything. That's why it's going higher. So it really kind of makes you question, is that release of the strategic reserve, was it necessary? Did it really change the trajectory of anything? And are we going to complete all 150 days of it? Would be the questions that I have. Because right now, we're pushing back up again. And as you mentioned too, Putin has also put talks on hold in Russia. Okay. I don't know that this really changes much overall. I don't know that anybody believed that peace was actually like on the board. They're like, yeah, we're doing it, but it's through Zoom. No. Right. But now they're saying that they're essentially blocked by the Ukraine, right? They've agreed to continue discussions on the Ukraine between countries at various levels. Again, the various levels we've already found out doesn't matter. So it's I don't know. It makes the situation interesting because again, you question, was Putin serious about any type of talks, and was he putting anything forward? And on the other side, was Ukraine do they want peace now, or are they just going for we're going to completely defend ourselves with unlimited resources? Who knows where you're going to go with it, but it's not having the same effect. Right now this basically says, hey, peace is blocked, and every single indice across the board is up. NQ was up almost 2%.
Yeah. Right now. In fact, let's get into those indices because I do want to see, because everything's taken off. Nasdaq's leading the way.
Yeah, the VIX is way down. Really, the VIX collapsed, and then we heard that, hey, listen, war is still on. There's no peace. What's peace? And it's done nothing. Where the week before was like a tank rolled. It jumped, and it didn't here. So, it really doesn't matter which one we look. ES has broken through some levels that sliced through the 23.6 like nothing. We had this level here that we'd mentioned and we talked about yesterday, but kind of got sliced through a bit, and it bounced off of that just briefly. We came back up. We didn't even flinch. We hit the 50. We came back and we used the 50 and said, thank you, sir. Ended up punching through the 61. And now we're sitting on a racetrack. We don't really have anything until we come all the way back up to these levels we had talked about before, all the way at the start of this retracement. And again, those are pretty decent levels. Those are big pushes. So question is, can we get ourselves up there? That brings us back up to this 40, 42, 50 level. Right now, the way that this is forming, there are some levels in here, unless anything is earth-shattering, unless this consumer confidence number comes in at like 40, there's really no reason why this wouldn't, have the ability to continue forward today. There's just no data out there. There's no news. Powell just said, "Hey, listen, we're raising it 2 more times for 50, and it's cool."
And
And the
people, yeah,
market was
people
like,
know it.
"Okay, yeah, like
Yeah.
we said that you should have done it before, but okay." Um, and yeah, so I mean that's there. I mean NQ is up almost 2%. NQ is at a little bit different of an area. Again, that Harry Potter we talked about yesterday, fully completed down. So let's remove all these just to remove it off. Now, I will leave the small kind of level that we're looking for the entry for the Harry Potter break because that's what we touched yesterday on the way down at 10:30. Um, actually, I'm sorry. This one actually hit at 11. It stopped right before it at 10:30, and then at the 11 o'clock candle is the one that shot it back down again. But we've been forming a base here right below the 50. And again, what it's doing is it's getting buyers by getting buyers, and it's really building up. And you could probably even draw a zone right here and say, hey, listen, there's a zone that's pulling from. So it's building a base for itself. And if you look to the left to see, okay, where the next area where we knew that there were sellers in the past, they're not coming up really until kind of around here. But these are just a bunch of wicks. I would say that cleanly, probably all the way back up to again, up to like 12.5, 12,495. Again, kind of the same scenario. And again, a lot of this is being drugged down by Twitter. But you know, if you didn't hear what Twitter is,
Yeah.
Elon was like, "It's off, it's on." And again, this is it's odd, but at the same time, it's not necessarily odd. These are questions that people, once they get access, like once a bid becomes serious, you're allowed to analyze the people's books that you're buying. You're not allowed to look at them beforehand. So this is something we've seen this in the past. So this is not uncommon. This is not him being strange, but it's temporarily on
Well,
hold because he needs to prove that they're not
it
fake accounts.
it is
He's paying
strange
for the
he
numbers.
would tweet it out that I'm out, and then the stock tanks 20%, and then he says, "No, no, 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 I'm still in. I just
He had to
I'm
buy
talking
more.
to him."
Yeah.
We know that that's going on, but this is the power of Twitter, and this is one of the concerns the world has, that he doesn't think before he puts something out in the public domain. And in fact, I'm really curious if his tweets were approved by his board like they're supposed to be.
Yeah, I mean,
Or is he doing it just
it
to piss
is.
off the government and our regulators, saying
Yeah,
the rules don't apply to me? I don't know. The rules apply to everybody equally.
yeah.
So
I
I
mean,
just
this
think it's
is.
cuckoo.
Yeah, I don't know if putting it on Twitter makes the most sense, but it is a legitimate concern. We have seen
No,
this
for
before
real.
whenever there's been buyouts of social media. And again, remember his offer is still out there, and that's the offer that they're getting the approval on. So it doesn't matter if it drops or not. He's still got to pay the what was it,
The breakup
50.
fee, if it doesn't go through, he's got to pay that.
Yeah, and
Um,
he's got to pay like he offered like 58 or something like that. So I mean, he's got to pay the higher amount. So expect that as much as Twitter is down right now, I expect that we see Twitter to rally up. And remember, the stocks in here, it's low. Once they find out, yep, you know what, it's good. It is less than 5% because again, this is social media. You're paying for users. You're not paying for anything else besides the user count. The
yeah,
fake ones don't count. They purge them, but that's important. NQ, if you look at NQ, it's already up right now, even though Twitter's getting just hammered.
yeah.
Sudden
Well,
Twitter
yeah,
takes off, there's some extra fuel for NQ. So YM also now yesterday YM we were talking about was the strongest. It's reversal week. YM is now the weakest. It's still up 1%. You can see it kind of came through and it sliced through some levels and used some of these levels. So it's nice that we now have a more near term kind of look at this. And in reality, when you pull this all the way down, you can see that we just kind of broke through. We fought, but it broke through the 23.6. But same idea. It's got the same kind of racetrack over here and same level. And that level also is up at the 50%. So I would say that although it's the weakest, YM is still kind of up there. I mean, if this one really, really, really decides that it wants to turn negative today, again, consumer sentiment could be absolutely horrid under 50, and that probably would send this tumbling a bit. I would say that YM would be the one to trade it. I'd be looking for a break of probably below 31,798. But right now, I think the other three offer better opportunities right now. Russell came down, and again, we said we were looking for a bottom, and it did kind of the same thing. It kind of came down. It opened. Here's the open yesterday of Russell, straight up. Whoops. I can't even hit the buttons today. Straight up, and then the reversal. It was 10:30 is the green one, right before the red one. Came back up and used that same level and dropped down again, and then came all the way back down again, and then reversed all the way back up again. So if you like reversals, the Russell has been it.
well,
Russell
everything has been
also,
crazy.
yeah, I mean Russell, same scenario. Look, there's no. I mean, I'll drop it. Actually, this is a 30. I'll drop it down to 15. You can see there's no green candles in here until all the way up top. Where we're here, it has the ability to go from here to here before we run into any sellers. It's already at 1.36%, up 23, almost 24 points. So I would say the same thing. Again, conservatively, you're looking at that to bounce off of 1795. But I would say today, lack of this number coming in below 50, all the indices are set up the same way. They're in areas, they're beyond the major fib level, so you don't have that trading coming in. The only two contagions right now that we need to worry about is, again, people saying, oh, wait, Powell said we're raising 1% in the next 2 months. Holy crap, that's a lot. That's doubling. Maybe they talk about that, trying to drive up fear so people watch more of the news networks. But there is no technical levels in here. And, as we've mentioned earlier this week, like things like gold, dollar yen, we talked about it, psychological levels, and it just blew. Now it's gone through everything. And again, gold, silver, it's a reversal day except for gold and silver. Again, I'm just going to reiterate one more time again. Every time it pulls up, sell more. It's just that's the environment we're in. There's no other way to say it. And again, we're getting close to 1,800. 1,800 will be a number we hear about in the news a lot. It was a number in the past. They're bringing it back. Silver stabilized a little bit, but again, silver is now pushing back down again. And I said 20 before the end of the week. Actually, originally Monday I said 21. We got our 21, and now I'm like, could we get 20? I don't know that we'll get 60 cents below today, but I think look for this one.
But we certainly got underneath 21.
Yeah, we're 50 cents under. So again, I'm definitely cleared on my target for the week, and I think next week you're going to have to start looking at this one, especially with Powell saying, hey, 1% in the next 2 months. And, Bostic is going, wait a second. I thought we were going to take a year and a half to do that. We're going to go to 2%.
Nope, they're going to get there faster.
Yeah.
They're going to get there faster.
So, yep. So,
all
that's
right.
it. All right. Feel good Friday, except if you have oil. So, everybody else is
All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. We answer our own emails. Brian is accessible. Please, you got any questions for him, email him, support@keeptradingsimple.com. You can also email me, todd.rich@nadex.com. And it's been a wild week in the markets. Equities all looking to open solidly in the green. We do have energies punching higher, and the metals going lower. Powell confirming that they're looking at 250-point rate hikes, one in June and one in July. Markets digesting that information, and we're getting a little bit of relief in the equities, bonds being sold, money coming back into the markets. Brian and I will be back. Actually, Brian will be back on Monday. My colleague Dan Cook will be filling in for me early next week. I'll be out for a couple of days. But until then, good luck in the markets all. Thank you so much for joining.